Today, the SEC reportedly faces a setback in its lawsuit against Binance US. FTX files suit against Sam Bankman-Fried's parents to claw back millions in alleged misappropriated funds. And we check in on the latest in crypto regulation with Sacha Ghebali of The Tie. Welcome to CNBC's Crypto World. I'm Jordan Smith. Major cryptocurrencies mostly flat today. As of noon Eastern, Bitcoin rose 0.5%, trading closer to $27,500, and Ether traded around $16.50 for a second straight day. Cardano, however, shot up 4%. Okay, let's talk about the top stories. The SEC reportedly faced a setback in its attempts to gather information from Binance US on the exchange's operations. The SEC had argued in court that Binance's US arm wasn't providing information fast enough and asked a federal magistrate judge to allow the agency to inspect the company's infrastructure. According to Bloomberg, that judge said he was not inclined to allow inspection at this time. One of the SEC's central arguments in its lawsuit against Binance US is that the company is closely tied to the international business. The regulator argued last week that Binance US was keeping assets in Binance's wallet platform, dubbed Sept. Now CZ is taking to X, formerly Twitter, to deny that claim. He says that Binance US does not use and has never used Sept or Binance Custody, which is the old name of the wallet before it was rebranded to Sept earlier this year. The problem is that contradicts statements from Binance US's attorneys in court. They told the court on September 12th that the company did use Binance's wallet service, Sept, but that it had sole authority to access those funds. We reached out to Binance US, and a spokesperson declined to comment. Next, FTX has sued Sam Bankman-Fried's parents. In a Monday court filing, the bankrupt crypto exchange looked to recover, quote, millions in fraudulently transferred and misappropriated funds by SBF's parents. FTX claims the pair exploited their access and influence within the company and enriched themselves at the expense of the exchange's customers. That allegedly includes thousands of dollars in hotel stays, a $10 million gift, and $16.4 million in luxury property. We weren't able to reach their lawyers for comment, but the New York Times reports that the attorneys for SBF's parents said the claims were completely false and designed to hurt their son's chances at trial. Last, Hong Kong plans to scrutinize crypto regulation following the arrests linked to the crypto platform JPEX. Hong Kong's chief executive John Lee made the announcement today, arguing that the incident highlights the importance of investing in crypto platforms that are licensed. He added that the Securities and Futures Commission will make sure that investors are sufficiently protected. Police in Hong Kong arrested 8 people over allegations of fraud at JPEX, which AP reports impacted more than 1,600 investors and more than $150 million in assets. The arrests came after last week's announcement from the commission that JPEX was unlicensed. The crypto platform announced yesterday that it was suspending some transactions on its platform amid the probe. All right, let's talk about U.S. crypto regulation for our main story. There have been a growing number of developments in recent days, including a bill last week from Congressman Tom Emmer meant to provide regulatory clarity. And just yesterday, news signs that Senator Elizabeth Warren's crypto money laundering bill is gaining more support on Capitol Hill. Among the 9 new supporters are the Democratic chairs of the Senate Homeland Security and Judiciary Committees. So I spoke with Sacha Ghebali of The Tie to get his take on the shifting crypto regulatory landscape here in the States. Okay, so let's talk first about Senator Elizabeth Warren and her new crypto money laundering bill. It's gaining traction on Capitol Hill among Democrats, and this bill is really focused on tackling crypto crime versus something like regulatory clarity in terms of which agency's in charge of crypto or providing clear guidelines for crypto investors. I'm curious, is that what works in the U.S. right now in terms of getting legislation passed, getting support? Is it focusing more on crypto crime and illicit transactions versus, say, more of that clarity that a lot of businesses are asking for?
Yeah, I think that's a great question, right? I think these days the crypto crime has really been the focus, especially in the past year. And obviously the ongoing trial with the FTX/SBF case is obviously shedding some light on this as well. I think that's a lot of a fear play, right? And it's playing with fears, and for people to be able to invest in a growing asset class, right? First, you need to overcome those fears. And so I think that's what it is tackling, right? It's making sure that pure crime is not as easy to do as it might be right now. And so I think that's the important part of the intention. Then there's this other bill that's trying to prevent the Fed from getting CBDCs down the line, right? And again, the intention behind it is to be able to prevent the Fed from doing mass surveillance of citizens. But what does it really achieve, I think, is the bigger question, because at the end of the day, what is it really going to prevent them from doing? And if you are in a mindset where we need to be competitive compared to the rest of the world, what does that mean for crypto in the US and talents moving offshore? And I think that's the bigger problem that regulators have to deal with, is both mitigating the crime aspects, right, and regulating them just like in traditional finance and how we've always done it, and still being competitive as an innovation center in the world.
I also want to ask about Tom Emmer's bill. It lays out some clear definitions for blockchain developers that don't hold funds, saying that they're not money transmitters. Are lawmakers on the same page with what businesses are asking for in one chamber versus the other?
I think that's really the key, right? That's really a key element. Knowing where knowing where you have to be regulated, how and what you need to put in place. The question about the developers is also related to that, but quite new, in the sense that if you were building a tech company, if you were building just technology and writing code that you would allow other people to use, people using the code would be the ones liable for misuse, right? Well, obviously not if you're writing ransomware code, like something that is clearly illegal. But if you're building open source code to allow people to build platforms that can be completely legal, it gets really, really difficult to pinpoint to why a lot of the cases around developers, especially for decentralized exchanges, right? I think there is a lot of lack of clarity for developers and around all the decentralized exchanges. Do we regulate at the code level, at people who are building the front end part that is going to interact with the users? But even when you try to decentralize all of that, who is responsible at the end of the day? And is it reasonable to say that a developer, just because you're building some very potentially world-changing technology, that you're responsible for any potential misuse of it? I think that can become very quickly unreasonable, and I think there is a lot of fear that can create a lot of fear among builders and people who are building those technologies. And I don't know if I would feel very comfortable writing code for a DEX in the US.
Obviously, I feel like if people have been watching Crypto World for some time, they know that we've been talking about the SEC since the beginning of this year, when they really started this crackdown, and now we've seen several lawsuits where they've lost or maybe haven't gained as much ground as they thought they would. Is the concern for crypto businesses around the SEC and its mandate to regulate the industry waning? Are they less concerned about the SEC's influence over crypto regulation as these legal battles have sort of played out?
I think we're still early there. We're still early. There's definitely the Ripple case has been appealed, and we'll see where that goes. It's really early to tell who eventually will get the power there. The question whether there needs to be regulation or not, I think is clear. Is there needs to be some regulatory action, and a lot of that now is being driven by the MiCA regulation in Europe, for example, right? And so I think seeing how crypto businesses adapt to that first is going to be an interesting learning lesson. When it comes to the cases that are being brought in the US, especially with the SEC, it's been a lot going through enforcement, right? And so at the end of the day, it's all in what in the judges that are involved in those cases, and these are very long processes, right? I don't think we're going to see something in the next couple of months that is going to bring the clarity that is desired in this space.
Do you see any chance that we end 2023 in a better position with any more clarity than we came into it here in the U.S. while other countries are moving ahead? It doesn't seem like the momentum's on the U.S. regulators' side here.
I personally think that's unlikely, and especially with the new NYDFS proposals, I think it's still not clear who regulates exactly what. Recently, there was the Financial Stability Board made some recommendations to align more globally different regulators together. But there is still a big question of who does what and who regulates what and who is in charge of what, and how we can really establish strong similarities between some of those crypto assets and their sort of traditional finance counterparts. And when you add to that all the uncertainty around the SBF trial and all the information that might be released around that, not only as a strategy to influence opinion, but also all the things that might come up in the public documents that will be released. And I think that part is going to be important for regulators, because they need to address risks, and some of those risks are associated with fears. And so these are the things that they will need to address in their plan to regulate crypto.
All right, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.